Okay, good afternoon, everyone. Thank you so much for taking the time once again. I know we had a double header this week, in fact, I see a lot of the same names that were on yesterday. So I just want to say thank you again. And my goal is for every one of you to walk away with nuggets, sales ideas, new product info, underwriting strategies, all the above, so you can go out and move the needle literally this afternoon, right? Otherwise, it's a waste of an hour with all of us, which is not okay. So I know you're going to get a lot out of this. Make sure you're taking notes. Use a notes app. Use the Q&A. We have that question panel you can expand or minimize. So if you have any questions, comments, feedback, good, bad, and different, we want to hear from you. Okay, we build these presentations around your thoughts. So please feel free. We're going to try to answer every single person as we go in real time. But if we don't, we will circle back as soon as we hang up this presentation right before 3 p.m. Eastern Time. Okay. What I want to mention too is we have a giveaway today. So if you're on until the end and you're paying attention the entire time, I'm going to ask a question, and you have to give me the answer. You have to be first and correct, obviously. And if you are, I announce your name. You walk away with a new Apple iWatch, okay? Plus a prospecting book on us. So make sure you're paying attention. You're on until the end. And then you have to get your little fingers on your keyboard, and you got to be quick to answer the question. So, what we're also going to do is everyone else is a winner as well, because if you're an active Levinson agent, just go share on our Levinson Facebook page or our Google reviews page, your comments, testimonial, review, all the above. And then we also send out a prospecting book complimentary. Okay, so everybody could be a winner today. On top of that, you're going to walk away with these gold nuggets that we spoke about a minute ago. All right, today's presentation, very excited to feature John Hancock today. Lots of reasons why. Number one, we haven't done this in a while now with John Hancock. Number two, they have a new product launch that I hear is second to none when it comes to hybrids in the industry. So I'm very excited myself to hear about this for selfish reasons. So I think everyone's going to love to hear what they just came out with. Number two, we're going to talk about all of the hot reasons why to start marketing and selling for Hancock in 2025, because it has been a while. When I think about Hancock, and I have my agent hat on, right? Because we have to, in order for us to be successful, we have to think about our agents first and foremost and what will move the needle for them, right? To help more families sell more policies. So when you look at all of Levinson's direct IMO contract carriers and you say to yourself, okay, Bill, you have over 90 carriers between life, annuities, supplemental products. Why Hancock? Okay. So when I say to myself, why Hancock, I think number one, when you think about that top tier company as far as customer service after the policies in force, financials, okay, think about branding, household name, okay, that's where they shine, okay, A plus rated, excellent life products, some great underwriting niches that quite frankly, no one else has. Okay, some of them they do. Okay, yes, I will say that. Some of them they do not. I personally love the long term care rider on the life chassis. I think that's a big deal because you don't have to go through that typical standalone LTC underwriting, okay, like in the old days. And then, of course, you never had those guaranteed premiums and policies would blow up. And we all know what happened after that. So there's a lot of reasons, and that's why I wanted Harry, who is our internal at Hancock, to shed some light on everything that's hot and, of course, the new product, which is why we're all here today. The quit smoking incentive, I think, is huge. Think about this for a second, right? And I just said there's a few things that no one else has, period. And this is one of them. So they will actually give your clients non-smoker rates. Okay. And that within itself should make you Superman or Superwoman, and you'll win over the case because the premium's going to be about half compared to other carriers. Okay. Now, They do have to prove that they quit in a certain amount of time. And if they did, they get to keep the non-smoker rate. If not, it goes to smoker rates. But man, what a great niche. If I was an agent, talk about scrappy marketing, right? I would be marketing this in all the right places. And we know where those places are. You got to get the word out. So some of these things are great. And most of these ideas and strategies, your other competition or agents or agencies, they don't have this information or they're not set up. So again, a big leg up. Love the concierge underwriting department for your higher net worth clients and cases. We're here to help you. So reach out to us first, and then we can patch them in when and if needed. Let's jump into my first slide. I don't want to steal any of Harry's thunder, so I'm going to keep moving. But I'm super excited about this presentation. Also excited about Valentine's Day around the corner tomorrow. So, as an agent, right, how can we move the needle? We know what to do on a personal level, but in this business world that we're all in, right, how can we take this and run with it? And I'm going to tell you exactly how. We have a bunch of campaigns all built around Ensure Your Love. That's the concept and strategy. So, what we did is we took a handful of our top carriers, and they have marketing already pre-designed, pre-built just for this concept that you can co-brand with your name, logo, phone number, or we can even do it for you. So we're going to send this email out tomorrow, and it'll just give you a ton of ideas so you can start marketing through e-blasts, mailers, group texting, whatever it is you want to do, even a CSR rep. I would pound this message out tomorrow all day, okay, starting at 9 a.m. Eastern time. So use anything. And as scrappy agents, right, because we want to do bigger and better things in 25, we have to find these things, hold on to these things, and run with these ideas, right? And that's what scrappy means. It's getting the word out, doing whatever it takes. And that's what we're doing with this Ensure Your Love concept. Let's go to the next slide. What I also want to talk about is more cash in your pocket, and we'll pay for your leads. Okay, so starting tomorrow, okay, for Valentine's Day, we have this new incentive we're rolling out on the annuity side. And again, we will either give you green cash or we'll pay for your annuity leads. You get to pick. And the great part, starting at just $250,000 of premium on the annuity side. So that's very achievable. Let's keep moving forward. What I want to do next is talk about what's closest to our heart here at Levinson, and that's you, right? Our client, our consumer, which is our agent, because we don't sell on a retail level. And I don't say that lightly, okay? If there's an agency or IMO or BGA, call it whatever you want, if they're selling on a retail level, they're competing with you, the agent. Run the other way, okay? And if you ask the question, and it's so simple, Bob, Susie, hey, I have one contract with you. Quick question. Do you guys also sell to consumers, to the public? Okay. And if they say, oh, no, we would never do that, get it in writing. Okay. And if they do, you're all fishing in the same bucket. Okay. It should be illegal. So, anyway, back to my point. You are our customer. And when I see reviews like this come in, okay, it means everything to me, our family, our staff, which is our extended family, in 3 different states now. We share this, we spread it around the office, and then when enough come in, we do a luncheon, we celebrate. But this is everything. So please share. April just sent this in. I just started my journey as an agent, looked at several companies to partner with so far, been so impressed with Levinson staff, trainings every day. I'm more and more confident that I made the right choice. Again, okay, this is why we're here at the end of the day. It's customer service. And bottom right corner, Levinson and Associates is a great company, great support, and a lot of expertise. That's all we need to hear. Okay, makes the day, makes the weekend. So please jump in and share. And like I said, you get a IUL prospecting book complimentary on us. Okay, and by the way, if you think for a second, if you're newer with us and, oh, this looks almost too good to be true. Okay, go to our Google's review page, just put in Levinson and Associates, or go to our Facebook page. You'll see it for yourself. Okay, I think it's like 99% 5-star reviews, and we've been around since 1972. So I think the proof is in the pudding there. Let's keep moving forward. What I want to do next, and by the way, we talk about trainings. We talk about customer support, customer service, and we're not perfect, but I always say we're 99% perfect, and the 1% time, right? If something happens where you're not happy, you're not comfortable, right? Maybe something fell through the cracks. Carrie or myself, Bill Levinson, we're here to help you. So pick up the phone, send an email. What I always think is the most important thing ever for our 24,000 agents is a huge $1 million question. If you have a problem, are they there? Do you feel confident that they are there to jump in and help you with this problem to try to resolve it? And if the answer is yes, we did our job. If the answer is no, something fell through the cracks and we need to make it right. So, anyway, make sure that if there's an issue, pick up the phone, send an email to me or Carrie personally, directly. You don't have to copy anyone. That's simple. Okay, 2025 annual expo is back, bigger and better than ever, is my promise to you. Okay, write down the date, April 11th, beachfront in South Florida on the sand. And here's the best part. Okay, number one, to motivate, right? You're an agent, you're in Cedar Rapids, Iowa, doesn't matter, Key West, Florida. The name of the game, how do I stay motivated or get more motivated or inspired to do and be better in 2025? And the answer, and it's a fact, is to surround yourself with like minded individuals that are at your level or higher, not lower or higher. Why? Because you start to talk like them, you act like them, you get ideas, you get strategies, you can share maybe for your networking group, maybe it's an IUL strategy. It doesn't matter, okay? But the point is, you have to surround yourself around those that are at your level or preferably even higher, greater, even more successful. That's why we do the expo. It's all day Friday. Then we have a networking lunch. Okay, some of these agents are MDRT agents. Some of our speakers are keynotes. They're you talk on the right hand side. Mary Reed, she's our featured life keynote. Her average case size 70 to 80,000 and up. Okay, these are monsters. These are whale cases, and all it takes. And you can say, Bill, I'm not that experienced in that part of the industry or that market. No problem. She will do the heavy lifting for you. She'll do all of it for you, right? If you have a guy or girl, she'll jump in, literally set up the Zoom call with you on it or not, make the sale. You still get the majority of the commission. Okay, tax saving strategies, retirement planning. Okay, she's great with business owners. Anyway, she's going to speak for an hour. On the left-hand side is the annuity sales coach, Charles Samuel. Brilliant guy. He came up with the 60-second close, and it works. Okay, I mean, it's a napkin presentation. Unbelievable. When he does it live, he's going to knock your socks off. So don't miss this free event for Levinson agents. I can't stress it enough. On the left-hand side, yes, it's complimentary, but if you want to stay in a 2-bedroom suite, oceanfront, starting at $30,000, and that's any type of application, life or annuity, $30,000 a premium, $60,000 gives you round trip airfare in our 2-bedroom suite, and then $70,000 round trip airfare, 2 nights in our 2-bedroom beachfront suite. So don't miss this event. I don't care if you're there just for the day or you're staying for 3 days, whatever it is. Okay, but please don't miss the event. We're capped at 300 per fire code. Let's keep moving. I don't want to rant. I have literally 2 more slides that'll be quick, and then Harry's going to take the wheel. The first one is cash, more cash in your pocket, right? I just spoke about the annuity incentive starting tomorrow. The Assurity incentive, right-hand side, gives you $100 with your first app. Now this this ends today. So today's the final day to get those apps in. It's so simple. Write an app, $100 cash. Left-hand side, Manhattan Life gives you a chance to earn at least $75 to $100 per app with Manhattan Life, on top of great comp and renewals on most products. So everything is a full pass-through from the carrier to you, the agent. Okay, there's not 17 layers in the middle that are all taking a piece of your comp and renewal. Doesn't happen here. My final slide here, and then Harry will take over, is what else is competitive in this new LTC and life hybrid world, even annuity hybrids. with LTC as well. In fact, we have basically a guaranteed issue product as well in the annuity space. But what I want to touch on quickly is you'll see a red rectangle around one name, and that's John Hancock because of the new product launch and where else they stand out in this area. So Harry's going to talk about that. These are the other options as well. So depending on the niche, depending on the situation, we have all bases covered. Okay, bottom is the annuity hybrids, middle section is hybrids with life, LTC, then traditional, top left corner, and then top right, single premium life with LTC riders. So when you have a client that has a need for a product like this, when you call your Levinson marketer, we will have not only an answer for you, but the most competitive product for that client, period. Period. Okay? It's not going to happen where another agent comes in and beats out our quote by 20, 30%, or even 2%. Will not happen. Let's go to the official presentation slide. I have Harry joining us from John Hancock. He's going to take it from here. Sit back, relax, plenty of notes. Harry?
All right, Bill, thank you so much. We're just going to go ahead and make sure that y'all can see my screen. How are we looking?
Yep, perfect.
Okay, fabulous. So again, thank you everyone for attending this afternoon. My name is Harry Stivers, and I'm an internal wholesaler at John Hancock. I partner with and support our RVP, Andrew Spiro, in the South and Central Florida territory. And we're just thrilled to be doing this for you. I think we have a great presentation today. We're going to cover a lot of topics and really close out on life care, right? That's when we're going to get into the weeds and really learn about what are the markets, what are the niches, and how can you today leave this meeting and start selling our new and exciting life long-term care hybrid product. So with that said, let's kick this off. So a little bit about us. We've been around for a long time. At John Hancock, we've got over 160 years of experience. Since the inception of our company, we've insured over 3.5 million customers worldwide today. We've paid out 7.2 billion in claims, and across all major rating services, we boast very strong financial ratings, such as the A+ from AM Best. So let's start talking about some niches and how we try to make it easy for you to do business with Hancock, regardless of the case size and age. Now, on this slide, we're going to start with our Express Track underwriting. This is one of our no exam underwriting options for clients applying up to 3 million, ages 18 to 60. Now you can access Express Track through e-applications or paper applications, so long as you include the medical part 2. And one of the major benefits with Express Track is, again, no exam underwriting if they qualify, with potential instant decision if you submit on an e-application. We've also recently expanded our no exam underwriting capabilities to capture people looking for a little bit more money. Death benefit. So now we've expanded our electronic underwriting to underwrite up to $5 million of death benefit with potentially just electronic health records. Now this is for clients ages 18 to 70, and it would have to be an e-application through our iPipeline e-app. But again, up to 5 million with no exams can be a really potent story for your clients who don't want a stranger coming into their house and poking them with a needle. It's that simple. Additionally, for some softer points, we did remove our EKG and treadmill stress test as routine requirements. And for your older clients, we can now accept cases rated up to 200%. And for those of you who are unfamiliar with Hancock, that's the equivalent of a Table 4 or Table D risk class. So more flexibility for your older clients. Now, Bill was talking a little bit about our concierge underwriting program, and I think this is really exciting. Keep in mind, this is for high net worth individuals, and we can take a look here at the parameters, household net worth of 10 million or greater, ages 35 to 70, and applying for face amounts between 5 million and 65 million in death benefit. One thing that's very cool about this feature in this program is that regardless of your risk class, this isn't only for super healthy lives, right? We can range from anything from super preferred non-smoker all the way down to one life as uninsurable in a survivorship case. So regardless of the health profile, if you have a client that meets these needs, we can submit a case up to 65 million in death benefit with no exam underwriting. And to talk about the process here a little bit, we will need the previous past 5 years of APS records to include current labs. And when I say current, for younger clients, we're looking at labs that are within a year and a half old. And for older clients, labs that are a year old or earlier. Um, and one of the benefits and why we believe this to be a really effective program is most high net worth individuals have concierge doctors, right? They're seeing their doctors all the time. They typically have more robust and comprehensive records. So we simply review that in lieu of an insurance exam. And again, up to $65 million with no exam. So let's continue talking about underwriting strengths. I mean, we won't spend too much time on this slide, but whether you have, coronary artery disease, diabetes, cancer, we can get very favorable ratings, depending on the situation. And one thing that I did want to mention that Bill brought up is our quit smoking incentive. This is truly unique to John Hancock, and for your smoker clients, you should be coming to us first. The way our quit smoking incentive works is we give standard smoker and preferred smoker clients standard non-smoker policy charges in the first 3 policy years. And they have the opportunity to quit smoking. Now, keep in mind, they will have had to quit smoking for a full policy year, and they can only elect this incentive after the first policy year. But if they've proven they've quit smoking, they fill out some paperwork and provide a microurinalysis clean of nicotine, we will permanently change their risk class to standard non-smoker with no additional underwriting. So really a great incentive for your clients that maybe are on the fence about quitting, but they know they have a life insurance need. This could motivate them to live a healthier life and save them money on their premiums. So in terms of underwriting, let's look through a lens of more, capacity and retention. John Hancock is known, for their large case expertise. And at John Hancock, we have amongst the highest retention and capacity in the industry, right? Up to $30 million for single life retention, 65 million for single life and survivorship for our auto bind limit. So for large cases, we should be your one-stop shop. And additionally, we're a leader in the high net worth foreign national space. So as we can see on the slide here, we've recently updated our capacity for A and B class countries to 65 million, and we've increased capacity to 24 million for C countries. Now, this is a market that can feel a little intimidating, but I can tell you one thing, there's a lot of need in the foreign national market space. Foreign nationals, they want US assets, they want US based insurance. And personally, in the Florida territory, we found a lot of success, especially with, South American clients. So talking about retention, this is hot off the press. We recently introduced our Auto Bind Plus. So at John Hancock, we just partnered with a 4th reinsurer, which enables us to, in some cases, apply to up to $130 million of death benefit on our paper, right? Through FAC OB reinsurance, we can do, again, up to $130 million, right? The reinsurers don't need to underwrite. And there are some conditions here, but we find this really exciting, using our paper, our underwriting, our product and compensation. Again, we can do up to 130 million, and then through additional reinsurance, up to potentially 170 million at John Hancock. So with that being said, we've talked about the underwriting strengths and kind of process strengths. Let's talk about vitality. So for those who are not aware, John Hancock has a unique vitality rider. This is a healthy engagement rider where we simply reward your clients for living a healthy lifestyle. Now, keep in mind, there's a simple value proposition here, right? If your clients are living healthy, they get to live longer. John Hancock doesn't need to pay the claim as soon, and we feel like your clients should be rewarded through tangible ways, right? Whether they order a complimentary Fitbit when they register for Vitality, they can enroll in our Apple Watch program, they can get healthy food discounts. I mean, there's a ton of tangible benefits, but more importantly, they can save money on their premiums. At the bottom of the screen here, we see, the different statuses. Year over year, the insured would simply do activities, whether it's exercise, go to the doctor and report simple results like BMI, blood pressure, cholesterol, etc. And they are awarded points for things they already do. They achieve a certain threshold on an annual basis, and then they earn policy value credits for anything greater than bronze. That would be silver, gold, or platinum. And the statistics on this screen speak for themselves, right? Our Vitality customers find that they are living healthier lives because of the Vitality program. So let's talk about premium impact, right? Where is Vitality most impactful on your sales? So as mentioned, a feature of Vitality is a policy value infusion, right? So here we're comparing, a healthy life, that's that left-hand column, male age 50, preferred non-smoker, and I just used $100,000 as a full pay, so we can really outline the change in premium, right? So for the healthy life, almost $12 million of death benefit, without Vitality, or at Vitality at bronze, which is no engagement, they pay $100,000 a year. If they were willing to engage at gold, they would only need to pay about $89,000 a year, which over the life of the policy would have saved your client over 5 years of premium, right? 555,000 through age 100, and that's an 11% savings. So that's on a healthy life. Where we think Vitality can be most impactful is on your unhealthy clients, right? They have more room to grow. It will be more impactful if they improve their health. So for a table D, or 200% at John Hancock, right, that client can only purchase about 6.5 million in death benefit coverage, and they're paying 100,000 a year without engaging. If they engage at gold, their new solved premium is just shy of $80,000. So that's a 20% savings, and over the lifetime of this case design, they would have saved over $1 million, right? That's 10 years of premium that they've just saved. So again, Vitality is most impactful for unhealthy lives, and for standard or better, typically we're going to see savings in the 10 to 12% range. Not to mention, Vitality comes with some really impactful bells and whistles, right? For example, Prenuvo. This is a feature with Vitality where your insureds will get a discount on taking the Prenuvo whole body MRI scan. If you're not familiar, you would just go in for an MRI through Prenuvo. They would find many, many indicators, such as they would review for chronic illness diseases, heart disease, cancer, diabetes, other health style and life factors. Then they will tell you where you have indicators, and that can enable your client to be more informed about decisions on their own health, and they can follow up with their primary care physicians or specialists. And at John Hancock, you would get a discounted rate, and more importantly, you can skip the line, right? If the lab has a large queue of people waiting for that Prenuvo test, you get preferential treatment at John Hancock and get to cut the line and go first. So Vitality has many impacts both on and off the ledger, and it is unique to John Hancock. So pretty briefly, I just want to talk about products. We have a robust suite of products, whether we're looking for term, single life products, we have protection oriented as well as accumulation oriented offerings. And we have variable, index UL, survivorship. So really for whatever your need is, John Hancock has a solution for you. And I would say generally speaking, where our products thrive and where you're going to see us looking the best is in short pay scenarios. Whether it's for an accumulation product or a protection product, all of ours are designed to really shine in those instances. So if you have a 1035 case, you want to purchase max death benefit, John Hancock would be a great solution with our protection IUL. So if you do have any questions about the, portfolio, please direct them to Bill and his team, and they can get you answers about, the exact niches for each product and where it really sings. I'd be remiss if I didn't talk a little bit about multi-life solutions. At John Hancock, we offer Premier Benefit IUL. We also offer an accumulation IUL product on a guaranteed issue basis. But we're going to focus on Premier Benefit IUL today. And what it does is it enables business owners to provide permanent, portable coverage with long-term care and our Vitality rider. This offering is completed through a digital platform without requiring APS records, medical exams, and labs. This is really designed for high income owners and executives to be eligible for Premier Benefit IUL, we would need an office with a minimum of 10 high earners, meaning $100,000 or more, and we'd want the employees to range between the ages of 20 and 65. Now, keep in mind, there's a little bit of wiggle room here. For example, we just understand cost of living is different, whether you're in Miami or you're in Arkansas or California, right? So there is some wiggle room and we can negotiate with underwriting, but ideally we want it to be at that $100,000 sweet spot. And again, the major benefit for Premier Benefit IUL is it enables permanent, portable coverage with long-term care and our Vitality rider. So, coming soon. In March of 2025, we're going to be repricing our term offerings, and we're going to see about a 14% average price reduction for clients ages 60 and below, and for policies under $2 million. So that's, $1,999,999 or below. That's where we're going to see the improvement in the term pricing. Additionally, we're launching an updated accumulation VUL product. From what I've been told from my product team, it's supposed to be improved across the board, right? It'll have improved target premium relative to the product today, better income solves, whether we're doing a short pay or a pay to retirement design, and we've adjusted it so it'll be competitive in the protection space, right? If you want some flexibility, see how the markets perform, and then maybe max fund it, this will be a great product when it launches. Now, additionally, more to come here, but just wanted to put this on your radar. We will be repricing and updating our flagship protection IUL product, which is one of our top sellers. And there's a potential accumulation survivorship IUL that we're going to be launching later in the year. So let's talk about long-term care. Now at John Hancock, we have now 4 options that address the long-term care need, those being long-term care, our chronic illness rider, an accelerated death benefit for chronic illness, and then our newly launched life care. So first, let's talk about the need for long-term care. So statistics tell us nearly 50 million adults in the United States are providing personal assistance for family members with disabilities or other care needs. Up to 70% of caregivers have clinically significant symptoms of depression. And we know the cost of care can be extremely high. And that's today. What happens in 20, 25 years? And we'll get down to that and provide some tools that you can use to really dial in and identify your client's long-term care needs. So that being said, without a plan, families typically have 2 options, right? Option 1, you pay for it out of pocket, or their family provides for you, right? If the clients cannot afford to pay out of pocket, the burden often lands on the family. Now, family members typically, they may not be emotionally or physically equipped to provide the type of care they need to keep their loved ones safe and at home. We know that long-term care can be physically and emotionally draining on caregivers, and responsibilities are rarely split equally. For many, no matter how much money they have, people are hesitant about paying for people outside of their families to go for care, right? There could be a trust issue and we don't know how long that's going to last. Then let's just take a step back, right? Life insurance with long-term care really provides a lot of benefit for your clients, right? You have a death benefit if it's not used. You have an acceleration of the benefit, so you don't need to scoop into your retirement savings. What if there's a down market, right? So the need to plan is certainly there. And on a personal basis, long-term care is near and dear to my heart. My grandmother on my mother's side, she had a long-term care need, but did not have the proper planning. And thank goodness, my mom has 4 siblings and they all live locally, so they were able to provide that care. But I got to see how harrowing it was for my mom to come home after caring for someone she really loved and not feeling like she could do an adequate job. So let's talk about the cost of care, right? We've gone over the need, why it's so important for our clients, both financially, emotionally, and physically. But what about the cost of care, right? We know what it is today. What about in the future? So at John Hancock, we have a calculator, which can be found on our producer website, free of charge, which is a great tool to select your client's locality within their state, the year we assume they will need long-term care, and you can project whatever rate of inflation you choose. And as we know, costs can vary significantly, even within a state, right? Whether you plan to retire in Miami or Fort Myers, there's a big difference in what the cost of care may look like down the road. Not only that, but how your clients envision their long-term care experience can be very impactful as to what we project their costs to be. So if we look at this table, and this was built using our calculator, assuming a 4% rate of return in Miami from 2023 out to 2042, we can see how much more expensive the care need is down the road. Not only that, we can see that it vastly differs depending on how your clients want to receive care. So with that being said, we've talked about the cost of long-term care, how to talk about it and review it with your clients. How does one go on claim at John Hancock? Well, regardless of your, long-term care option, whether it's traditional long-term care rider, chronic illness rider, or accelerated death benefit for chronic illness, the claim trigger is the same. So your insured would need assistance with 2 out of 6 activities of daily living for a period expected to last 90 days or a severe cognitive impairment. Benefits are payable after a 90 calendar day elimination period. So as mentioned, at John Hancock, we have 3 major options and we just added a 4th. So we have our long-term care rider. This has been our flagship rider that you would add on a life chassis. This pays a benefit on a reimbursement basis. And I would say this is the best choice for your clients who want to maximize their benefit amount for their dollar. With our long-term care rider, because it pays on a reimbursement basis, we can choose to accelerate up to 50%, $50,000 as their maximum monthly benefit. Next up, we have our chronic illness rider. This is our indemnity flavored rider, within this group. So this does come with a monthly charge. This is a great choice for clients who want to maximize the flexibility of their benefit and choose how to spend it. And last but not least, we have our accelerated death benefit for chronic illness rider. Now this one is free of charge at issue, so there's no policy drag on performance. And it's a great option for sales where maybe long-term care wasn't the driver of the sale. However, they can acknowledge that they may need it down the road, right? A charge for this is only assessed if the insured goes on claim. So it's a great just in case option to add to the policy, considering there's no charge, again, unless the insured needs to go on claim. Additionally, it's worth mentioning the long-term care rider and chronic illness riders are separately underwritten for. With the accelerated death benefit for chronic illness, so long as your client is rated 200% or better and within a certain age range, you can just add it on with no additional underwriting. So you may run into an instance where, let's say you get standard non-smoker for the life rating, but long-term care and chronic illness were declined. You can add this as a backup, the accelerated death benefit for chronic illness. So let's briefly review. We have our long-term care rider, again, most bang for your buck. Chronic illness, the most flexibility, that pays on an indemnity basis. Then our accelerated death benefit for chronic illness rider. So for initial death benefits at maximum with long-term care, we can have a $5 million death benefit. We could choose 1% acceleration. That gets us to our 50% monthly. Same with chronic illness, max initial death benefit of 3 million, at a 1%. The maximum monthly would be, subject to the IRS per diem limit, or, the lesser of that, or the maximum monthly benefit. So one thing to note, chronic illness rider, we can get up to $30,000 of a monthly benefit. However, it's subject to the IRS, at the time of claim. And last but not least, our accelerated death benefit for chronic illness. Again, this one is our free of charge at issue, a great just in case option to add on your John Hancock policies. With that being said, we now have our 4th and exciting option, life care. So this is a new linked benefit product designed to meet the client's long-term care need while offering a meaningful death benefit. Life Care offers unique features that we're going to dive into more later in the presentation, but these include the capability to receive indemnity benefits up to the IRS per diem, and then go over via reimbursement. We also have our annual benefit lock guarantee. This is a feature that we designed to combat and outpace compound inflation riders that you may see with other carriers. Not to mention John Hancock's Vitality. On Life Care, if your client engages in Vitality, they can permanently increase their guaranteed death benefit and long-term care pool. And keep in mind, that's not tied to the market. So your client has some real control over the growth within their policy. And last but not least, digital submission, right? We want to make it easy for you to do this business. And so we're hoping for a target of 60% of applicants to be fed through on an instant or expedited decision basis. So let's dig into the details. So basic parameters here, right? Issue ages 30 to 75, initial death benefits between 50,000 and 500,000. Again, initial benefits. We're going to get to how this grows in a moment. We have 4 premium payment options ranging from single pay to 15 pay. And we offer 4 risk classes, right? Preferred non-smoker, standard non-smoker, select, which is unique to Life Care. And keep in mind that kind of captures our rated cases up to table D, and standard smoker, right? So if you're a smoker, that's not an automatic knockout for Life Care, you can still apply. Now, keep in mind, there is a couples discount, but you can elect the couples discount whether or not both apply. You just need to be, you need to have a partner, right, to be able to access that. But again, you don't need both insureds in the couple to apply. We just need one to get that couples discount. So let's talk about the benefit periods, right? At John Hancock, we're offering 3 different options: a 2-year, a 4-year, and a 6-year. So we want to give your clients the option to choose what most fits their need. That being said, some important information for you all is that the 4-year benefit period is going to be our sweet spot. And we're going to talk about that a little bit down the road, but that's really where we're going to be most competitive. Now, keep in mind on the 6-year benefit option, we do offer a 5% compound, long-term care inflation rider. However, we've really designed this product so that our benefit lock guarantee, which grows with policy value growth, and again, we'll talk about that soon, should be able to outpace our competitors within those riders. So let's talk about the underwriting process. Right, as I mentioned, it should be streamlined. It will be digital submissions. We've already talked about the risk classes. We do offer a quick quote mailbox, which Bill and his team can share with you. That would be the "I got a guy" question, right? You could just send in a brief summary. Our underwriters will take a look and let you know if it's a good case. Keep in mind that a part of the underwriting, if you are age 60 and older, there will be a cognitive screening, which is in the form of a 15 to 20-minute telephone call. And then to kind of expand on that, right? Again, that's going to be Illumifin. That is the third party that will conduct the telephone interviews. And we have 2 underwriting paths available, right? Instant expedited underwriting, that would be issue within 5 to 7 days of application. We want to make it fast from submission to commission, or referral to an underwriter, right? And that simply means something occurred in the e-application that caused some concern, and we want to take a look at that a little more deeply before making an offer. Now, I know we talked about Vitality, how it works, right? Your clients do the things they're doing already that are healthy. They simply report them to the app and website, earn points, and earn a status. But Vitality on Life Care works a little bit differently. On permanent products, you can use Vitality engagement to lower premiums. However, for Life Care, Vitality engagement will always, so long as you engage at a silver level or greater, it will always increase your long-term care and death benefit pools when you engage. And that increases your guaranteed death benefit and long-term care pools. Again, I think this is really impactful because it gives your clients control over the growth within the policy. So we talked a little bit, in my summary of Life Care about the different benefit options, right? At John Hancock, we have the unique feature to do cash indemnity first up to the IRS per diem limit. Then assuming your maximum monthly benefit is greater and you need more care, you need more long-term care dollars, we can do reimbursement above the rest, which is really exciting. It gives your clients the flexibility to choose how they want their benefit. So a scenario here, right? A client is approved to go on claim, their expenses are $20,000. Let's say our maximum monthly benefit is also $20,000. If they went on claim today, they can only access $420 per day, or equal to 12,600 a month in 2025. So the result is LifeCare is going to first pay up to the IRS per diem without requiring receipts, right? If they wanted to be reimbursed for that additional up to $20,000, we would simply need receipts capturing, all of the expenses, right? Not just the balance above 12,600, but from 0 to 20,000. And I think it's really important to talk about how we want to make it easier for you to coordinate care with your clients, right? At John Hancock, we have a third-party partner that works directly with our clients in John Hancock to facilitate the reimbursement process, right? Once a plan is in place, they can actually facilitate direct transactions between the care provider and John Hancock, reducing the client involvement, not getting their client's daughter, their son, whomever is helping them out and managing those receipts. Not to mention that helper bees can help provide clients with reputable nursing homes and adult care facilities, provide them with experts, provide discount rates for these particular facilities that are within the Helper Bees kind of network of referrals. So it's a really awesome tool to help alleviate the stress of going through a long-term care claim. All right, so client profile, right? We kind of think that there's going to be two markets for life care. We've got the single pay market, which is, your kind of wealthier clients, ages 55 to 65, million plus net worth, that have liquidity, right? Maybe they've got a few $100,000 sitting around in a money market account or bond funds. And this could be an opportunity to simply reposition an asset, right? Let's move $100,000 into life care. Let's protect you against your potential long-term care needs with a meaningful death benefit if you don't use it, right? That way they don't need to dip into their retirement accounts during down markets, right? And then the other scenario would be multi-pay, right? These we would say younger clients, 35 to 55 in age, typically higher income earners that are already doing what they should be on the investment side, right? They're putting into their 401k, their max funding, their qualified plans, their Roths, their IRAs, et cetera. And that's where we were going to see the single pay, or excuse me, the multi-pay niche, right? Maybe they don't have 100,000 lying around, but they can afford 10,000 on a 5-pay or a 10-pay, right? And we really think getting in early, locking in that insurability is going to be a great story in this market. So let's talk a little bit about how it works, right? As mentioned, in this scenario, we're going to do $100,000 single pay, right? We've got our client, age 60, female preferred, and we're assuming Vitality Gold for engagement. She's simply repositioning her asset to protect herself against long-term care needs. So day one, and this is assuming a 4-year benefit provision. Keep in mind, as a rule of thumb, your long-term care pool for the 4-year and 6-year benefit provisions are always simply going to be double your death benefit pool, right? So if death benefit's 150,000, long-term care pool is going to be 300,000 in that example. So here we can see, we start off with about a 6,000 maximum monthly benefit. We've got 305,000, assigned for long-term care benefit and $152,000 death benefit. Through the mechanic of the annual benefit lock guarantee, which we're going to get into in a moment, but basically locking in index account return, positive returns within the product, and vitality performance. In 25 years, we've grown your benefit from 305 to 811 for long-term care, and we have a meaningful $405,000 death benefit. And most importantly, we have a large maximum monthly benefit for when your insureds actually need it. So let's talk about 4-year, right? In my previous examples, I've been using a 4-year benefit as my baseline. And the question is, why did we optimize it for that, right? You'll see many carriers like to show off their 6-year benefit provision. So really, it's a lot due to John Hancock's claims experience with long-term care. As I mentioned, 160-year-old company. We used to sell traditional standalone long-term care, So we have robust experience on paying these claims and the claims data, not to mention, just other third-party research. And what we came to find is that the average claim lasts 3.1 years, right? So we feel a 4-year benefit where our goal is to have more when you need it and that maximum monthly benefit than our competitors makes a lot of sense, right? And having a higher maximum monthly benefit, not only can you just get more, each month, but it provides flexibility. Because at John Hancock, if you don't accelerate your full maximum monthly benefit, the remainder stays in your death benefit and long-term care pool. So in this example, right, we're comparing ourselves against Nationwide for the same exact client, looking at age 85. Nationwide's offering, about a $13,000 maximum monthly benefit. John Hancock at that same year is 18.5 thousand, right? However, if we only accelerated the same as Nationwide, we would be able to extend the total benefits out across 5 years and 8 months, right? Almost matching their total benefit duration. But if they needed it, they could simply take more at John Hancock. So that's really the thought process about why that 4-year benefit is most impactful and we believe most potent for your clients. So let's talk about the annual benefit lock guarantee. So this is the special sauce, right? This is very unique for John Hancock and how it works. And we'll get into the nitty gritty in the next slide here, but we have our policy value year over year. We will multiply that by a factor that is scheduled within the contract, right? So long as that end result is greater than your current death benefit and long-term care pool, we will permanently adjust your guaranteed net death benefit and long-term care pool every time it increases, right? So when the markets go up, we can take advantage of that, lock in that growth. And when markets are down, you're protected with the 0% floor and your death benefit and long-term care pool will not change. Now, keep in mind, at John Hancock, this is an index chassis. So we do have 3 options available. We have our, select capped index, which is our basic S&P 500 account, does not have a performance charge. We have our high capped index, which does have a performance charge, but a guaranteed multiplier. So that's, really if we want to swing for the fences, get the most return possible, that's a great account. And last but not least, we have a managed volatility flavor within our Barclays Classic account. So we won't spend too much time on this slide. I know I want to be sensitive of our time today, but just taking a look here, this is really granular details about how that benefit lock provision works, right? So if we assume a 5.21% rate of return, that's the current maximum illustrative rate in our select capped account. Our left table simply shows how we project to grow, right? And as you can see, every year we would multiply the benefit lock factor by the policy value to equal our new death benefit, right? If it's greater than what it used to be, we will lock in that growth. So the middle column, right, shows us, okay, what happens if we get 5 years at the maximum illustrative rate, and then we illustrate zeros thereafter? As you can see, it continued to grow until it was locked in. And now we just have that, 208 odd thousand permanently until the, markets rebound, and then we can continue to capture. Then last but not least, what about a varied rate example, right? Max rate year 1, couple of zeros, a 4, and then we're back up. So in these instances, it may take a little bit of time, a year or 2 for the policy value to catch up. And then when we apply the factor for the death benefit to increase. But as you can see, if we get good performance down the road, we can still catch up with this, benefit lock guarantee. So really quick, same triggers, right? As we went over for long-term care, chronic illness, accelerated death benefit for chronic illness, it's 2 out of 6 activities of daily living, a 90-day calendar elimination period, or cognitive impairment, and a written plan of care from a licensed healthcare provider. So same exact benefits. Now, to summarize, right? LifeCare's value proposition, in my opinion, and what I think you should all be talking about and what will make the sale can be broken down into 4 or 5 major factors. The first being the capability to do indemnity benefits up to the IRS per diem limit and then go above via reimbursement, right? It gives your clients a lot of flexibility down the road, and that's something only John Hancock offers. Our annual benefit lock guarantee, right? Being able to capture the positive real returns in the market and permanently increase your guaranteed death benefit and long-term care pool. John Hancock's Vitality Rider. Again, this is a way your clients, not tied at all to market conditions or policy performance, can impact their policy and their lives in a positive way, right? Permanently increasing their death benefit and long-term care pool. Last but not least, digital submission platforms, right? We want to make it easy for you, so we want to make it quick, right? 5 to 10 minutes for an application, potential for instant decision, which would be submission to commission within about 7 days typically. And that's amazing, right? We want this to be fast. We want it to be transactional. And the product's fully guaranteed so long as they pay their premium on time. So when we pile on all of those features and factors that are unique, I think this is a very valuable product to take to the market and one that should differentiate yourselves than, our competitors in this space. One last note, I do think that this is going to be especially potent. If you're an agent that does assets under management, you're an investment advisor that does some insurance on the side, that's really where I think Life Care is going to sing, right? A simple story of repositioning your assets to protect yourself against long-term care needs and drawing down on your investments and their assets under management during down markets. So with that being said, thank you all so much for your time. I really appreciate it. And Bill, I'll turn it back over to you.
Great job, Harry. Excellent. I know we have a bunch of questions that came in. Like I said, we'll answer every single person as soon as we hang up in just a few minutes. I'm going to hold everyone here for about 4 more minutes. I know we're a little bit over, but Harry, you did an excellent job in a short time. And now you can see why I was saying earlier, a ton of nuggets and call them niches, strategies that you can use right in your daily sales practice to have a leg up against your competitors, right? Especially some of these LTC riders, features, the quit smoking incentive. That's huge. So anyway, enough of my rant. Let's get started. If you are appointed today with Levinson, wonderful. If you're not, if you're with another competitor for whatever reason and you want to move everything to Levinson, we will match or beat your comp, most of the time beat, free leads, or cash for contracting with your first paid app. You pick. Everything is here on our website. Let's keep moving forward. What I want to do next, and this is a great tool for you, right, to run permanent quotes, term quotes, and then compare to see what other carriers and products are showing up. But here's the coolest part, and of course, Hancock is included. In fact, they were the pilot with Levinson and Associates as the IMO. When you put in the basic info with your client, everything populates, right? You see the left screen? Everything populates into a quote engine, then into an illustration, then into an e-application without you doing anything. So you and the client fill out what's ever missing. Boom, you just literally ran a quote. You filled out an e-app and you went. In fact, sometimes it's a same day approval or decision. But you went through the entire process in less than 14 minutes, A to Z. So take advantage of that. It's on our website, of course, free. Next slide here is the ultimate door opener when it comes to long-term care. I love this, especially for some of your clients that aren't too healthy, maybe can't qualify for LTC. This is called HHC, Home Healthcare by Manhattan Life, and it's on our Insure Me Now Direct platform. Okay, now here's the best part. Basically, guaranteed issued, just a few questions. As long as your client can say no to the questions, boom, they're approved. Up to $450 a day max benefit. And this could be 100% direct to consumer, which means you can email your link to Insure Me Now Direct to 1,000 of your clients, friends, network, whatever, all the above. And if 5% say, you know what, I'm in, you just sold 50 new policies. Okay, comp is great, renewals great, available in most states, but you got to run with this. We even have a podcast just talking about this strategy. We'll include in today's thank you email. Let's keep moving forward. Social media tip of the month. So, as you know, every single month we have our 101 tips, and this month we are talking about Insure Your Love in various ways to get the word out, spread the message, and talk to your consumers about why it's so important to have a life insurance policy to be protected, especially with a spouse, loved ones, all the above. Okay? So run with this marketing material and it will help open doors. Next slide, real fast. And by the way, I know I'm almost done. We'll do our question of the day as well. So someone's walking away with an Apple iWatch, $600 of value plus the prospecting book. Okay, this came out just a couple days ago. What I love about this, my agent hat is on again. Every carrier, product, strategy, piece of technology that Levinson offers is here in one image, hits your inbox every other week. Okay, so you don't have to go through hundreds of websites and passwords and logins. It's 1, 2, 3 right in front of you every other week. Boom, done. Allows you to focus on your day-to-day sales. Next slide. What we did here is we took all 55 episodes, okay, and we said, you know what? We're going to give you the top streamed episodes in one screenshot, and that's what's in front of you, left-hand side. Obviously, this is all complimentary. We're on every podcast platform or even YouTube, whatever you prefer. Check it out. Let me know what you think. When you always hear these questions from agents or newer agents, it doesn't matter, saying, hey, I'd love to pick his brain or her brain to see how they do it every day and how they're making over $1 million a year in this industry. Well, guess what? I interview these people for an hour and pick their brain on your behalf so you can learn and leverage these new ideas, okay? But all you have to do is listen, jot down some notes, try some of these things, and the rest is history, okay? You don't have to reinvent the wheel. Change a few spokes, okay? I say it all the time. Right-hand side is going to be my next recording on Friday, latest episode. Grant is from Central Florida, a younger guy doing a unbelievable job in just a few short years. And you're going to hear, in fact, he's working on a case now, a few $100,000 of premium that's just about wrapped up. So he's going to share what he's doing, okay, with himself and his agent. So he's got a good story to tell, which you'll hear about by next Friday. Let's keep moving. And by the way, I just have one more slide, then we'll put a bow on this. This is our upcoming training events. A couple things I want to point out that are important, different for us. On the bottom, Lloyd's of London. Okay, we are going all over all of their niche products. Okay, now, this is when you don't have any other options left. Okay, it's either Lloyd's or nothing, or business insurance, failure to survive, maybe foreign nationals, right? All the above. This is a great one-stop shop. That's on the 26th. And then, of course, next week, don't forget, on the 20th with Lincoln Financial, we're going to go over what's hot, what's not, what's new, what's different. So all the others we'll include in the thank you email tonight, so you can check that out when you can. My final slide, my giveaway slide, my Positive Tuesday slide. So real fast, my quote, left-hand side, don't just talk, say, and promise, right? Act, show, and prove, right? It's not just words anymore. It's actions. It's results. Stand behind your word. Without that, you are nothing. We are nothing. Okay? It's not rocket science, but you got to put the action in. You got to do the work. We all know that. You got to try these new things out. Try the new strategies. Okay, enough of me talking. You're probably done already with me, and I think we're going to put a bow on this right now. My last point here, I'm going to ask this question. Make sure your fingers are on the keyboard and you're ready to answer first and correctly. Question is, for a new Apple iWatch and IUL prospecting book, you have to give me the answer. Question is, what is the carrier that created the ultimate long-term care alternative product, the ultimate door opener product I just spoke about? Tell me the name of the carrier, and you win. About $650 in value with shipping, taxes, all the above. You're a winner if you answer correctly. JC is going to tell us who was number one, telling us which carrier it is. Offers the ultimate door opener product. JC?
Lloyd G.
Lloyd G. Congrats. The answer, Manhattan Life, and that product is on Insure Me Now Direct as well, so you could sell it either way. In fact, all the above, whatever easier for you and the client. Let's have a great Thursday, great rest of the week. Thank you, John Hancock. Most important, thank you to each and every agent that sat here with us is 67 minutes today. Great selling. Thank you again, team.